Repairing back, gano'n ba?
Opo, yung title po.
Okay, sige. Oo. Sige.
Case number 4, acquisition at more than fair value with adjustment of subsidiary accounts. Illustration, assume instead of paying cash, P Company issued 16,000 shares of its 10 par value common stock for 80%, which is 16,000 shares, of the outstanding shares of S Company. The fair value of P Company stock is 50 and the fair value of the 20% NCI is assessed to be 170,000. P Company also pays 50,000 in professional fee to accomplish the acquisition. P Company would make the following entries. First, to record the acquisition of S Company stock. Debit, investment in S Company 800,000. In order to get it, 16,000 share times 50 par value. Credit, common stock 160,000. In, in order to get it, 16,000 shares times 10 par value. And credit, additional paid in capital 640,000. Next, to record acquisition related costs. Debit, retained earnings. P Corporation acquisition expense worth of 50,000 and credit cost worth of 50,000. Acquisition expense is to be closed directly to retained earnings of P companies since only the statement of financial positions are being consolidated. The consolidation procedure for this case are as follows. First, compute goodwill in accordance with IFRS 3. Goodwill is the excess of, first, the aggregate of the acquisition date of fair value of the consideration transferred. Second, the amount of NCI. And the third is the fair value of the parent's previously held interest in the subsidiary over the acquisition date fair value of the net assets acquired. Using the above, goodwill is computed as follows. Price paid worth of 800,000 plus non-controlling interest at fair value worth of 170,000 with a total of 970,000 less fair value of net assets acquired it's 620,000. Yung 620,000 pesos po ay nanggaling sa illustration 14.8 with a total of 350,000 goodwill. The following assumption should be noted in the computation of goodwill. Non-controlling interest is measured at fair value 170,000. If the fair value of non-controlling interest is not given, its fair value may be estimated by making an assumption. It may be assumed that if the parent would pay 800,000 pesos for an 80% interest, then it may be implied that the entire subsidiary company is worth 1 million pesos. 800,000 pesos divided by 80%. Assuming this is true, the NCI is worth of 200,000 pesos. And to get it, 1 million pesos multiplied by 20%. The goodwill then would be 380,000 pesos. 800,000 pesos plus 200,000 pesos less 620,000 pesos. Next, non-controlling interest may also be measured on the basis of its proportionate interest in the acquiree's identifiable net assets. Under this option, NCI is equal to 124,000 and to get it 620,000 pesos multiplied by 20%. The goodwill then would be 304,000 pesos and to get it 800,000 pesos plus 124,000 pesos less the 620,000 pesos. Second, prepare a determination in allocation or DNA of excess schedule. The DNA schedule that follows or revalue the entire entity including NCI. The table would be divided into three. First, fair value. Second, parent. of 80% and NCI for 20%. Fair value of subsidiary, first table 970,000, second table 800,000 pesos, and third table 170,000 pesos. Less book value of interest acquired that include common stock worth of 20,000 pesos, additional paid in capital 180,000 pesos, retained earnings worth of 120,000 pesos with a total of 320,000 pesos. Total equity of parent of 80% is 320,000 pesos and the NCI of 20% worth of 320,000 pesos. That equal of book value of 256,000 pesos and 664,000 pesos respectively. The excess are worth 650,000 for parent, 544,000 for NCI, 106,000 pesos. Adjustment of identifiable accounts. Inventory, 10,000 pesos negative. And land negative 50,000 pesos. Buildings negative 200,000 pesos. Equipment 40,000 pesos with a total of negative 300,000 pesos, which is the goodwill worth of 350,000 pesos.
Pwede ba
Note,
baka interrupt diyan? Kathleen, i-interrupt ako. Kathleen, sandali.
Po.
Kathleen. Oo. Ibalik mo nga doon sa itaas. Doon sa itaas. Yan. Ibalik mo. Sige pa. Yan. Yung ano, yung may pangalawang ano, dot. Yung may pangalawang dot. Ibaba mo. Ba't? Saan ba tayo? Taas mo. Yan. Taas mo kaunti. Take ko. Price pay. Saan ba tayo? Ibaba mo ng kaunti. Ibaba mo ng kaunti. Yan. Dahan-dahan lang. Dahan-dahan. Yung pangalawang dot. Ay, ka. Yung unang dot. Pero kata di yung ano, dinilit na ayaw mo pakita sa amin. Assuming this is true, the NCI is worth 200. So, pinakita mo yung computation. The goodwill then would be, parang bitin, ano? Bitin?
puto lang po siguro, sir.
Wala. Mahalaga pa naman yon. The goodwill then would be 380,000. 380,000. Paano na-compute yung 380,000? Yung 800, ilad sa 200, tapos, sinubtract yung 620. Kaya ang lumabas ay 380. The goodwill. Yun lang, goodwill. So, yun dapat ang karugtong yan, ano? Oo. Okay, slowly, scroll down. Okay, class. Para bang lumalabas dito ay may excess na binayaran ang acquirer sa acquiree, 650,000. Marahil nga. Kaya lang, ang isinubtract mo dito, ang sinubtract mo diyan ay book value. Book value ng identifiable assets ng subsidiary. Kaya yung nagkaroon naman ng revaluation into fair value. So, yung 615 nag-a-appear na excess, mabawasan yan. ng increase in fair value. Nakikita niyo sa baba, no? So, lumalabas na hindi 650 ang excess, kundi 350. Kasi nagkaroon ng revaluation yung into fair value yung mga identifiable assets. Kaya lumalabas yung excess lamang ay 350. And that excess is the goodwill, no? That is the goodwill. Okay, continue.
Note the following features of the DNA of excess schedule for a less than 100% parent ownership interest. The first bullet, the fair value of subsidiary line contains the fair value of the entire company, the price paid by the parent, and the fair value of the NCI. The total stockholders' equity of the subsidiary, which is book value of net asset, is allocated 80% to controlling interest, 256,000 pesos, and 20% to NCI, worth of 64,000 pesos. The entire adjustments of subsidiary net assets, worth of 650,000 pesos, will be allocated 544,000 pesos to controlling interest and 106,000 pesos to NCI. And for the last bullet, when the fair value of an asset exceeds the book value, the difference reduces the excess. Conversely, when an asset's book value is higher than its fair value, the difference increases the said excesses.
Oh, ba't nawala? Kathleen. Kathleen, wala kami narinig.
Sir,
Nandiyan
hindi
ka pa
pa po
ba,
tapos si
Kathleen?
Kia.
Ah, Kikiya na ba?
Hindi pa po tapos si Kia,
Hindi,
sir.
hindi pa tapos si Kia.
Working paper eliminations entries. Based on the DNA of excess schedule, working paper eliminations entries can now be prepared as shown below. Eliminate subsidiary stockholders' equity against the investment account 80% and NCI account 20% as follows. For first, common stock of S company worth of 20,000 pesos debit, additional paid-in capital of S company worth of 180,000 pesos, retained earnings of S company worth of 120,000 pesos debit, and investment in S company credit worth of 256,000 pesos, credit non-controlling interest or NCI worth of 64,000 pesos. Allocate excess by adjusting the net assets to their fair values. The total adjustment is allocated to parent company worth of 544,000 pesos and to NCI worth of 136,000 pesos. Debit inventory worth of 10,000 pesos, land worth of 50,000 pesos, buildings worth of 250,000 pesos, equipment worth of 40,000 pesos, and goodwill worth of 350,000 pesos debit, and credit investment in S company 554,000 pesos, credit non-controlling interest or NCI worth of 106,000 pesos. Consolidation working paper. The working paper for the consolidated statement of financial position is shown in illustration 14.9 in the next page. The following should be noted in the working paper. The total stockholders' equity of S company is eliminated.
Take me as you are, push me off the road.
The investment account is totally eliminated. All subsidiary assets are adjusted to 100% of fair value, regardless of parent interest. Second,
I'm
next, the
burning
total fair
in
value of
the
the
rain.
NCI worth of 170,000 pesos is extended in the consolidated column. 100% of the fair value of subsidiary accounts are consolidated with the existing book values of the parent company accounts. The amounts that will appear in the formal consolidated statement of financial position are shown in the last column of the working paper, and last, the stockholders' equity of the consolidated column shows the components of the controlling interest, which is common stock, APIC, and related earnings, and the total non-controlling interest, or NCI.
Illustration 14-9. P Company and Subsidiary. Consolidation Working Paper, December 1, 2017. So we have here the assets of P Company. Cash, 168,000. S Company, 0. No adjustments. So we have here the consolidated 168,000. Accounts receivable for P Company is 144,000. For S Company, 40,000. No adjustments. So we have to add the 144,000 and 40,000. The sum is 184,000. Inventory for P Company is 160,000. For S Company, 100,000. We have here the adjustments of 10,000. So 160,000 plus 100,000 plus 10,000 kasi nasa debit side, which is 270,000. Land for P Company, 200,000. S Company, 80,000. We have the adjustment of 50,000. 200,000 plus 80,000 plus 50,000 nasa debit side ulit is equal to 330,000. Building for P Company, 840,000. For S Company, 300,000. Adjustment, debit 200,000. 840,000 plus 300,000 plus 200,000 is equal to 100,340,000. 1,340,000. Equipment for P Company, 400,000. S Company, 80,000. Adjustment, debit 40,000. 400,000 plus 80,000 plus 40,000 is equal to 520,000. Investment in S Company, P Company, 800,000. So, may adjustment na nangyari sa credit side na 544,000 at nag-eliminate ng 256,000. 256,000 plus 544,000 is equal to 800,000. So 800,000 P Company at yung adjustment at saka elimination ipagleles. So magkakaroon tayo ng zero effect sa consolidation. Goodwill, given na yung 350,000. So we have here the consolidated 350,000. Total, ni P Company ay 2,712,000. For S Company, 600,000. So after adjustment at elimination, we have the consolidated 3,162,000. For liabilities and equity, accounts payable ni P Company, 160,000. For S Company, 80,000. So pag-a-add din, walang adjustment, 160,000 plus 80,000 is equal to 240,000. Bonds payable for P Company, 400,000. For S Company, 200,000. No adjustment. So ipag-a-add lang ulit, 400,000 plus 200,000 is equal to 600,000. Common stock, P Company, 560,000. S Company, 20,000. So, magkakaroon tayo ng elimination. Bakit may elimination na nangyari? Dahil sa elimination and adjustment, eliminate 100% subsidiary equity against investment account and non-controlling interest account. So, ang ginamit ni business ay equity method. So, ang i-eliminate kay S Company ay yung under ng equity. So, para mag-eliminate, gagawin po natin ang double entry logic, which is nag-debit tayo ng 20,000. So to reverse, magkakaroon siya ng zero effect dito sa consolidation. So ang nagkaroon lang sa consolidated ay yung kay P Company, which is the 560,000. Additional paid in capital, P Company 1,140,000. For S Company 180,000. So we have to do elimination again. Debit 180,000. To reverse, gagawin lang ulit yung double entry logic at para magkaroon ng zero effect dito sa consolidation. Retained earnings, P Company 452,000, S Company 120,000. So isa sa mga ini-eliminate pagka equity method ay yung retained earnings ni subsidiary. So we have to debit 120,000 and para magkaroon ulit ng zero effect dito sa consolidated. NCI to consolidated, given na po sa report ni Ms. Malaluan 64,000 at yung 106,000. So we have the total of 170,000. Total of P Company is 2,712,000. For S Company, 600,000. Adjustment, 970,000. And the total consolidated is 3,162,000. Eliminations and adjustment. Yun na nga, sabi ko kanina, eliminate 100% subsidiary equity against investment account and non-controlling account. So, pagka ganun, equity method ang ginamit ni business. 2. Allocate excess by adjusting the following asset accounts that are undervalued. A. Inventory, land, B. Land, C. Building, equipment, and goodwill. Total adjustment is allocated to investment account and non-controlling interest. Consolidated statement of financial position. The formal consolidated statement of financial position resulting from 80% acquisition of S Company in exchange for 16,000 Terran shares has been taken from the consolidated column of consolidation working paper. Illustration 14-9. Makikita natin sa illustration na pinag-combine na yung financial statement ni P Company at S Company. Nagkaroon ng mga adjustments at eliminations. Then after that, consolidated na siya. So mag-create na siya ng panibagong financial statement which is the consolidation. Mag-group na si P Company at S Company. So ito na nga yung consolidation statement of financial position ni P Company and subsidiary, which is the S Company. Assets, current assets, 168,000, cash, 184,000, accounts receivable, 270,000. Inventory, ipag-add lang po yan, 168,000 plus 184,000 plus 270,000 is equal to 622,000. Non-current assets, land, 330,000, building, 1,340,000, equipment, 520,000, goodwill, 350,000, with a total of 2,540,000. Total asset ay 3,162,000. Liabilities and equity. Liabilities. Accounts payable, 250,000. Bonds payable, 600,000. Total liabilities, 840,000. Stockholders' equity, common stock, 560,000. Additional paid in capital, 1,140,000. Retained earnings, 452,000. Total controlling equity, 2,152,000. Non-controlling interest, 170,000. The total of total equity, 2,322,000. Total liabilities and equity, 3,162,000. Take note that the above consolidated statement of financial position is prepared on the date of acquisition. The next chapter will illustrate the effect of subsequent period activities on the consolidated financial statements. Adjustment of goodwill applicable to non-controlling interest.
Wait muna, no? Dalhin mo nga kami ito sa pinaka-umpisa ng iyong report. yung beginning. Ayan, ito sa, baba mo kaunti. Baba pa. Baba pa. Ayan, yan. Binabanggit dito yung computation ng goodwill, ano? Actually, ano yan? Formula yan no? Yung tatlo, ipapag-add mo. Yung 1, 2, 3, ipag-add mo yun. Tapos yung pang-apat, yung subtract mo para makompute mo, malaman mo kung magkano ang goodwill. Ano ba yung susubtract mo? Eh di yung sabi mo nga yung second dot Yan, ito i-deduct mo. The acquisition date per value of the net identifiable assets ng subsidiary. Ano naman yung ipag-a-add mo? Matapos mong ipag-add, isubtract mo yung second dot na yan, Siya sabi dito, ang i-add daw ay the acquisition date per value of the consideration transferred. Okay yon. Nakikita naman natin sa mga cases illustration. Ano pang i-add mo? The amount of NCI, na dapat at fair value. Nakikita na rin natin yon, Itong pangatlo, the fair value of the parent's previously held interest in subsidiary. So, may pangatlo pang i-add, Kaya lang, medyo ata mahaba na itong ating nararating, Nasa case 4 na tayo. Hindi pa nai-illustrate, na meron pang pangatlong i-add. Pero talaga may pangatlong i-add, Ang obserbasyon ko lang, nasa case 4 na tayo, wala pa tayo nakikita example na i-add yung pangatlong yan. So, para nakikita lang natin ay yung una, yung letter I, ina doon sa double I. Yung tatlong I, ay wala pa tayo nakikita. Na nasa case 4 na tayo. Ayun lang, Basta gusto ko lang i-emphasize na tatlo yung i-add. So, para nakikita natin I plus double I plus 0. Wala pa tayo nakikitang tatlong I sa cases illustration. Okay, so you continue your report.
Adjustment of goodwill applicable to NCI. In case 4, the total goodwill is 350,000. This is allocated between the parent company and the NCI. The allocation is calculated using the following value analysis. Company fair value, 970,000, which is the given. For parent price, na 80%, 800,000. NCI, 20%, 170,000. Fair value of net assets, excluding goodwill, 620,000, which is given also. 496,000, to yung 620,000 times 80% yung parent price is equal to 496,000. And 124,000, ito yung 620,000 times 20% ng NCI, 124,000. Goodwill, 350,000. For parent price, 304,000. NCI, 46,000. The NCI share in goodwill of 46,000 could be reduced to 0, but the NCI share in the fair value of net identifiable asset is never reduced. This means that the total fair value of NCI can never be less than the NCI percentage of the fair value of the net assets. In this case, it cannot be less than 124,000, 620,000 times 20%. Illustration. To illustrate the above principle, assume that the assessed fair value of NCI is 120,000, which is less than 124,000. Since the NCI value can never be less than its share of net identifiable net assets, the value of NCI would be therefore be raised to 124,000, replacing the 120,000. The goodwill computation and allocation would be modified as follows. company fair value, 924,000, parent price, 800,000, NCI, 124,000. Fair value of net assets excluding goodwill, 620,000, parent price, 496,000, NCI, 124,000. Goodwill, 304,000, parent price, 304,000, NCI, 0. So makikita po natin sa NCI na kapag ang nag-assume po dito ng assessed fair value ng NCI is 120,000. Eh sabi po dito na ang total fair value dapat daw ay hindi mas bababa sa NCI percentage ng fair value ng net asset. So hindi mo dapat ilagay yung 120,000 sa NCI. So ang nilagay niya ay 124,000. Pinalitan niya na 124,000. So magiging zero balance na yung NCI. Take note of the following in the above assumptions. If the 120,000 fair value of NCI is used, the NCI share in the total goodwill of 300,000, 920,000 minus 620,000 is negative for 4,000, which is not permitted. The total goodwill of 304,000 is only allocated to the parent company. If goodwill becomes impaired in future periods, the impairment loss would be allocated to the controlling interest only. So yung total goodwill daw ay kay parent company lang naka-allocate. Kaya if ever man na magka-impairment loss in the future, ang controlling interest lamang or yung parent company ang mag-allocate ng impairment loss. Yun lang po. Thank you.
Class, may matatanong ba kayo? Now, sa tingin ko naman, at that point, maintindihan ninyo, no? Ang laman. Kung talagang iintindihan nyo, no? Maintindihan nyo yan. Oo. So, walang tanong. Okay. Huwag na muna kung itanong muna yun. So, we have the next, this evening, okay. Almendras. Dayan. Ano bang babanggitin ni Dayan? The acquisition cost is less than naman to. Less than the fair value. And also, yung may mga adjustments doon sa mga net identifiable assets ng subsidiary. Kasi nga, nagkaroon ng revaluation to fair market value. Okay? So, maganda ang explain mo Ganda ng kitang-kita. Okay, Dayan. Okay. Less than the fair value. So, yan na yung no? Yan na yung gain on bargain purchase. Okay, sige.
Good evening, everyone. I will discuss the case 5. Acquisition at less than fair value with adjustment of subsidiary accounts. Illustration, using the same data, assume that P company issued 8,000 shares of its 10 pesos par value common stock for 80% of the outstanding shares of S company. I-acquire or bibilhin ni P company ang 80% ng common stock ni S company. The fair value of a share of P company stock is 50 pesos. P company also pays 50,000 pesos in professional fees to complete the combination. P company would make the following entries. Number 1, to record the acquisition of S company stock. Debit investment in S company 8,000 shares times 50 pesos fair value equals 400,000 pesos. Sabihin, ito yung binayaran ni P company para sa 80% na common stock ni S company. Credit common stock 8,000 shares times 10 pesos par value equals 80,000. Credit additional paid in capital 320,000. Number 2, to record acquisition related cost. Debit retained earnings of P company acquisition expense 50,000, credit cash 50,000. Assuming that the fair value of the 20% NCI or non-controlling interest is not given, the following assumptions would be made to estimate its value. The parent pays 400,000 pesos for an 80%, then it may be assumed that the entire subsidiary company is worth 500,000 pesos. Kapag daw hindi given ang amount ng fair value ng NCI, i-divide ang price paid sa interest na i-acquired. Kagaya dito, 400,000 divided by 80%. Refer this as the implied value of the subsidiary company. Assuming this is to be true, the NCI is worth 20% of the total subsidiary company value. 500,000 times 20% equals 100,000. Kung yun daw ang susundin, ang NCI value daw ay 100,000. The NCI value, however, can never be less than its share of net identifiable asset, which is 124,000. Ang NCI value daw ay hindi dapat mababa sa NCI percentage ng fair value of the net assets. Ito yung fair value of, nakuha to dun sa fair value of net assets ni S Company, which is 620,000 multiplied by 20%. Therefore, the NCI share of company value is to be increased to 124,000, replacing the 100,000. The consolidation procedures for this case would be the following. Compute the gain on acquisition excess of the FB or fair value of net assets acquired over the aggregate of the consideration transferred. The non-controlling interest and the fair value of any previously held equity interest in the acquiree as follows. Price paid 400,000 pesos, non-controlling interest at fair value 124,000 with a total of 524,000, less fair value of net assets acquired excluding goodwill 620,000. Ito yung sinasabi ko kanina na fair value of net assets ni S Company. Pagmamainasin itong dalawa, so gain on acquisition is negative 96,000. Kapag gain on acquisition, kapag mababa yung price paid kaysa sa fair value ng subsidiaries net identifiable asset, ibig sabihin, favor siya sa acquirer or kay T company dahil idadagdag to sa capital niya. The gain is to be recognized only by the controlling interest, IFRS 3, as shown below. Company fair value 524,000 less fair value of net assets excluding goodwill 620,000 equals gain on acquisition negative 96,000. The allocation is 80% for parent company and 20% for non-controlling interest. So, company fair value of parent is 400,000 while for NCI is 124,000. Less fair value of net assets excluding goodwill of parent is 496,000 while for NCI is 124,000. Gain on acquisition of parent is negative 96,000. Walang gain on acquisition ng NCI dahil lang sabi kanina ang controlling interest lang daw ang magre-recognize ng gain. Kaya yung 96,000 is only allocated to parent company. Number 2, prepare the determination and the allocation of excess schedule. Fair value of subsidiary 524,000, 400,000 for parent and 124,000 for NCI. Less book value of interest acquired, common stock 20,000, additional paid in capital 180,000, retained earnings 120,000 with a total equity of 320,000. Given to dun sa illustration 14-8. Interest acquired of parent 80%, while for NCI is 20%. Pag multiply, so the book value of parent is 256,000, while for NCI is 64,000. Pag minusin to get the excess, so 524,000 minus 320,000 equals 204,000. Excess of parent company is 144,000 while for NCI is 60,000. Adjustments of identifiable assets Inventory, negative 10,000. Nakuha din to dun sa illustration 14-8, pero nakita naman natin kanina, diniscuss na to ni Kia. Land, negative 50,000. Buildings, negative 200,000. Equipment, negative 40,000 with a total of negative 300,000. Pag-a-add din to, itong excess at saka ito, 204,000 plus negative 300,000 equals gain on acquisition of negative 96,000. Working paper elimination entries, the DNA or determination and allocation of excess schedule above provides the data to prepare the following elimination entries. Eliminate 100% of the subsidiary stockholders' equity against the investment account 80% and the NCI 20% as follows. Debit common stock of S Company 20,000. Debit additional paid in capital of S Company 180,000. Debit retained earnings of S Company 120,000. Credit investment in S Company 256,000. Non-controlling interest or NCI 64,000. Nakuha nga pala to dito, itong entries na to dito sa excess schedule. Adjust the assets of the subsidiary to their fair values and allocate the total adjustment to controlling interest 144,000 and NCI 60,000. Debit inventory 10,000, debit land 50,000, debit buildings 200,000, debit equipment 40,000, credit retained earnings of the company 96,000. Ito yung gain on acquisition. Credit investment in S Company 144,000. Credit non-controlling interest or NCI 60,000. Take note that the gain on acquisition is close directly to the retained earnings of the parent company, since only the statement of financial position is to be prepared on the date of acquisition. The consolidation working paper for this case is presented below. The company and subsidiary consolidation working paper December 1, 2017. Assets, cash. Cash of P Company 168,000 while for S Company 0. The consolidated is 168,000. Ibig sabihin ng consolidated, pagsasamahan yung kay P at kay S Company. Accounts receivable of P Company 144,000 while for S Company 40,000. The consolidated is 184,000. Inventory of P Company 160,000 while for S Company is 100,000. Adjustment, increase of 10,000. The consolidated is 270,000. Land of P Company is 200,000 while for S Company is 80,000. Adjustment, increase of 200,000. The consolidated is 330,000. Building of P Company 840,000 while for S Company is 300,000. Adjustment, increase of 200,000. The consolidated is 1,340,000. Equipment of P Company 400,000 while for S Company is 80,000. Adjustment, increase of 40,000. The consolidated is 520,000. Investment in S Company of P Company is 400,000. Elimination, decrease of 256,000 and 144,000. Ibig sabihin, matatanggal yung account na investment ni S Company. Sabi kanina, investment in S Company account balance should be eliminated. Also, shareholders equity of S Company. Dahil eliminated na, hindi na siya recorded dito sa consolidated. Nakuha nga pala tong eliminations and adjustments dito sa entries kanina. Total assets of P Company, 2,312,000 while for S Company, 600,000. The consolidated asset is 2,812,000. Liabilities and equity, accounts payable of P Company, 160,000 while for S Company, 80,000. The consolidated is 240,000. Bonds payable of P Company, 400,000 while for S Company is 200,000. The consolidated is 600,000. Common stock of P P company is 480,000 which is recorded sa consolidated. Bonds payable ay common stock of S company 20,000, elimination decrease of 20,000. Additional paid in capital of P company 820,000. Consolidated is 820,000. Additional paid in capital of S company 180,000. Elimination decrease of 180,000. Retained earnings of P company 452,000, adjustment increase of 96,000. The consolidated is 548,000. Retained earnings of S company is 120,000, elimination decrease of 120,000. Kung mapapansin niyo, shareholders equity lang ni P company ang kasama sa consolidated kasi eliminated na yung kay S company. NCI2 consolidated adjustment increase of 64,000 and 60,000. The consolidated is 124,000. Total liabilities and equity of P company 2,312,000 while for S company is 600,000. The total eliminations and adjustment is 620,000. The consolidated liabilities and equity is 2,812,000. Yan lang po.
Okay. So there, ano? Oo. Now, matanong nga si, ano, itanong ko sa iyo, Diana. Diane. So, nakakakita tayo ng ano, no? Elimination entries at saka consolidation working paper, no? Kasi may lalagay kang elimination entries eh. Tanong lang ako kay Diane. Hindi naman pwedeng may consolidation tapos wala ka namang elimination entries. Elimination entries talaga nakikita yan sa consolidation. Kaya lang may tanong ako, Diane. Nakikinig ka ba, Diane? Diana?
Po, sir.
Narinig mo ako? Oo. Kung sakasakali lang naman, no? Assuming lang naman. Alam naman natin, hindi pwede mawala ang elimination entries eh, no? Kasi consolidation yun. Tanong ko lang naman. Kung sakasakali bang wala, talagang wala, assuming lang, walang elimination entries. Assuming lang. Kailangan ba natin mag-prepare ng consolidation working paper? Diana.
Hindi ko po, sir, opo. Kasi po, kung meron naman pong in-acquire yung yung acquirer po.
Linawin mo muna sagot mo. Hindi naman malinaw yung sagot mo. Linawin mo naman. Kailangan ba natin consolidated working paper? Assuming lang naman, wala tayong elimination entry. Kailangan pa.
Opo, sir. Kasi po, yung consolidated naman po ay para po pagsamahin yung
Kasi
kay P, yung sa acquirer at acquiree po na assets and
okay,
liabilities.
correct. No. Oh, correct. Kahit wala ka ng elimination entry na hindi naman pwede mangyari. Kailangan mo rin mag-prepare ng consolidated working paper. Paano ka mag-a-add? No? Anong dokumento ang iyong ipakikita para mapatunayan na ikaw ay nag-addition? Yung consolidation working paper. Okay. Sino kaya matanong ka pa dito? Yung nag-report si Malaluan. Malaluan, nandiyan ka pa ba? Oo, nandiyan pa yan.
Opo.
Okay. May tanong lang ako. Kapag tayo ang bumili ng subsidiary at 40% ang sa atin. Tapos, di may 60% pa. Ay yung 60% na yun, ay pinaghati ng tatlo, no? Tatlo. Tatlo 20. So, bale, yung atin, 40. Tapos, merong tatlong 20, so 100. Tayo ang 40, ano? And, merong namang ebidensya na nagpapatunay, maaaring magpatunay, na tayo ang may control. Kahit pa tayo 40% lang. Sapagkat yung tatlong 20%, mga unrelated parties, hindi pa magkasundo. So, hindi lamang clear evidence, kundi judgment ng expert, tayo may control. So, tayo gagawa ng ng consolidated financial statement. Tayo may control eh. Diba? Sabi doon na ang importante may ebidensya. As a judgment ng expert, yung acquirer may control, ano? Kaya importante control. Di ba tinatanong ko si Malaluan? Pagpalagay natin, bumili tayo ng subsidiary. O hindi, huwag natin tawagin subsidiary. Nabili natin 40%. But in this case, nung makita natin, may dalawa pang may-ari. Yung isa ay 40% din. At yung pangatlo, 20%. Hindi 100 lahat. So, ano ba labas? 40, 40, 20. 40, 40, 20. Ang tanong ko sa iyo, Kia, kung yung ganun 40, 40, 20, at atin yung 40, tayo ba yan, no? Dapat din ba natin isiping, probably, ay kailangan natin mag-prepare ng consolidated financial statement.
Ano po, opo. Since tayo po yung may control doon, tapos need din po natin ng patunay po. Kaya need po natin gumawa ng consolidated financial statement.
Kailangan natin?
Opo.
At sa pananaw, parang mahirap ata yun, no? Paano mo masasabing control natin yung kung tayo may control? Hindi ba tayo nakakasigurado? Baka kontra yung may another 40% pa. Hindi tayo nakakasigurado na friendly yung sa atin. Baka yun kontra. No? Mahirap ata yun ang sitwasyon. Ngayon, saan tayo magre-rely? Dapat mag-produce tayo ng ebidensya, tayo may control. Dapat merong judgment ng expert na tayo may control. Kaya lang, napakahirap no? Yung 40% pag-aari ng iba. Tapos sabihin mo, tayo may control. Mahirap ata, makumbinse ang pagsasabihan mo. Kahit pa yun kahit pa yung 40% related party, kahit pa. Pero sabihin, yung ating 40% ang may control. Kahit pa yung 20% related natin, ba pera kung makapag-produce tayo ng ebidensya Ay yung 20% ay related party. No? May makipakita tayong ebidensya at merong judgment ng expert na we are in control. So, what then is a very important, class? Yung ma-establish mo, meron kang ebidensya, meron yung judgment ng expert. Ikaw nga may control. Okay. So, class question sa... May mga tanong pa ba kayo? Wala na. Okay. So, kung walang tanong, buksan ang mga camera. We go to the last number of our program. Aha. Ayaw pang gumana ang aking camera. Hindi bali. Kahit wala ako. So, nandiyan kayo. Our photographer tonight, si Rose Ann Rosidan.
Yes po.
Rose Ann, nakikita ba ako? Hindi, no?
Po, sir.
Hindi ako makita. Rose Ann.
Kita
Bukas
po.
na ang camera ko, oh. Ha?
Kita po. Kita po. Wala kang ano.
Kita na ako. Nakita ako. Ay, kita. Okay. O, sige. You count. You count 1, 2, 3.
Ayoko ko bumilang.
Ay, teka, bakit merong mga nakasara? Ayan.
Game na po.
Kita ba ako? O naman kahit
Opo,
di ako
sir.
makita eh. Ba't nakita yun lang? Game na, ikaw, bahala ka.
1, 2, 3.
Count ka ng 1, 2, 3.
1, 2, 3.
Okay na? Oo. Another smiles for the record. And namin yung
Sir, okay na po. Sent na po.
Send na. Oo. Hindi pa nagre-ring tong cellphone na to. Ayun. Downloading photo. Ayun. Okay, class. Ba, nakita rin ako. Good night. See you again. Kailan? Tomorrow. Tomorrow.